Well, hello and welcome. Very much looking forward to this presentation here on YouTube. So what is going on? Well, the markets are in bearish opening range mode. No doubt about that. There was a significant support level we've been watching and it's now broken that. Could this be forming a double bottom? Well, potentially. If we look here at the futures market, we can see it's slightly up, but not significant. Something over 1% would be significant. So really not a lot going on. And part of that is due to the fact we have a lot of earnings coming out this week, particularly the Federal Reserve announcement and the Fed Chair press conference just before the market closes on Wednesday. We've got jobless claims, housing starts and permits, industrial production, existing home sales, producer price index, which would normally precede what we see with consumers. So it's a pretty big week for news announcements, no doubt about that. So the market will be watching all of this very, very closely, and that could really give the market direction once this week has completed itself. So we'll be keeping an eye on that. But if we have a look here at our opening range mode, we said last week anything below 4279 is bearish. So we are down here at 4204. If we look at this from a intraday perspective, amateurs open the market, professionals close. So we did open up and then just sold off throughout the day, and certainly sold down, right? Significantly down. In fact, that was from the prior day. Let me just bring that in. There we go. So if we have a look at this, you can really see that, yes, a small pop in the open, but then the rest of the day selling off, and then particularly the last part of the day really selling to finish to the downside there, right down at that round number of 4200. So keep an eye on that. Round numbers can act as magnets and support levels or support zones. So we'll keep an eye on that. A break of that level, certainly we're going further, but it is bearish price action, closing on its low for the day, below the opening range low as well. If I look here at some of the market internals, the SPX put call ratio, that's neutral right now. The total put call ratio there at 105 is actually bullish, shows too much fear in the market and the market likely to move higher. So that's interesting. Again, it's only one metric, can't just look at that by itself, but that is bullish. The TRIN of 1.5, that is neutral. The skew, perceived risk of a market crash, is right now at 130. That's below 135, so that's neutral as well. So we're getting a lot of neutral, maybe one bullish sign there with our market internals, but when we look at the price action, certainly bearish, and we've got a lot of economic news coming out this week, particularly on Wednesday with the Federal Reserve. So not a time to be putting big money into the market. Let this week play itself out. Got to be patient and wait for next week to come out once all that news has been baked into the price. We've got a bit more clarity, but really, if you're looking at the markets, what's really going on? Where's the money going? Well, you can see here that energy, certainly energy, oil stocks have been doing very well. We've got XOM at the moment, which is doing nicely for us, and MPC, a couple of oil stocks that are looking good, and we've made some profits on already just within the 1 week. We look here at agriculture, that's certainly been moving up as well. So, we're getting a lot of commodity type stocks that are doing well right now, and that's normally what you see, especially when with inflation, you're seeing 40-year highs in inflation. Consumer price index rising to its highest level since 1982. Very flawed way of measuring the cost of living, mind you. But a lot of people do look to commodity stocks when you get periods of inflation. Raw materials are in short supply right now and inventories are depleted. And commodity stocks provide opportunities for investors to capitalize on costs that can be passed on to consumers. So, commodities tend to be a defensive investment during periods of inflation as their products are often in demand. So that's really where the money is flowing right now. And if we look here at the different sectors, we can see the two largest sectors, XLF and XLK, they're both below their 21 EMAs. The volatile and risk-on sector, biotech, is below its 21 and using that as a resistance level. The only two sectors that are above their 21 EMAs on a daily chart are utility sector, that's normally a defensive sector when there's a lot of uncertainty in the markets, and obviously energy. So they're the two areas that are the only ones that are doing relatively well, particularly energy, obviously. So that's mainly where we're going to be focusing our ideas for this week. So a couple of ideas that we're looking at. One of them is NEE. Now, this one, I've done my calculations on this, and the real value of this company is sitting at around 86.63. Right, takes into account a lot of different factors, but this one is undervalued. We've had a nice move here, nice double bottom, bounced off that 70 area, moved above, then pulled back to the 21. We could very easily see a move higher from here and back up above that 200-day moving average. So that's one we're keeping an eye on. What could you do with something like that? Well, we'll come back to that one, which we spoke about last week. There it is there. Real value of 86.63. I would be very defensive right now because there's a bit of uncertainty right now. This week is, if you have to trade, this is an idea. I would just sell the at the money call debit vertical spread. So sell the 80 call, buy the 77.50. $1.42 or $142 for one contract. One spread is a cost. $108 is a potential upside. 76% return on risk. Break even is 78.92, which is below where the current price is. And if you set your stop at 92, you're risking 50 cents, $50 to make 108. So your potential profit is twice as much as your risk. Asymmetrical risk skewed in your favor. That's a potential way of doing it. Another one that we're looking at here was Caterpillar. Now, Caterpillar is another undervalued stock. It has broken above the 200-day moving average right now, so I like the look of that. But when I look at this particular stock, which is right here, real value of 243.11, and right now it's trading at 214.83. So I like the look of this one. I'm going to be a little aggressive with this. Set up a call debit vertical spread, looking for it to get above 220 in the next 31 days. Right now trading just below 215. I could set something up here where I've got a 96% return on risk, sell the 220, buy the 210 for the 14th of the 4th expiry, 31 days from now. Potential profit 490, and I'd set the stop at 290. So you're risking $200 to make 490 with one contract, and obviously you could have 10 if you've got 10 contracts. You're risking 2,000 to make 4,900 in the next 31 days. 2.45 times higher potential profit than the risk that you're taking. That's another potential way that you could do that, but long term I like the prospects for Caterpillar. So they're just a couple of ideas, right? Obviously gold and things like that have been doing well. We talk about commodities and things like that. Gold's had a significant move higher, a bit of a pullback, which is pretty normal after a big move like that. GOLD was one that we were looking at. That's had a bit of a pullback there. And then Newmont Mining, which offers about a 2.86% dividend yield, would be attractive. Probably likely to have a pullback before they're moving higher, though, so I probably wouldn't jump right into that. But that's where we're focusing our ideas right now. A couple of precious metal stocks, a couple of oil stocks, and that's where our main focus is, something on energy, commodities, and that's sort of what's making sense and is what's making us money as we speak. So this week we have monthly options expiration. We've got quite a few positions that will be closing out this week. A lot of winning positions. But this Thursday, I just wanted to mention this to everyone. This Thursday I will be running a spread training webinar and an options trading webinar about some of the most powerful strategies I use to generate weekly income. Now, the great thing about this particular webinar is that you don't need to put any more than, say, 100 to 250 at the max. 250 will be the maximum amount of money you need to put into any one of these trades, making potential returns of 70, 80, 100% within a month. Very powerful, some great ideas there. We're talking about leaps and how and why you should use them and when to use them, how to use synthetics. There's some pretty powerful stuff there, and I'd love you guys to come along this Thursday. If you want to get an invite to that and you're not a member, if you're a member of mine, you would already be getting an invitation, but if you're not, send an email to support at cashflowoptions.com.au. Support at cashflowoptions, all one word, cashflowoptions with an s.com.au. Send an email there and we'll send you an invitation to attend that this Thursday. A lot of interest in this, and it is a great way of taking a small amount of money and growing it dramatically over time, and some very powerful strategies there utilizing the power of options. So keep that in mind for this Thursday, but until next week, I will say goodbye for now. Thank you so much for listening. All the best, and bye for now.